In this episode, Serenity Now for Entrepreneurs discusses the importance of your accountant, how they should help you, and when you should involve them as you grow your business. This episode features our resident accountant and co-host, Candice, as she shares her perspective on best practices when working with your preferred accounting firm. Your accountant is important to ensure tax compliance, but they are also advisors that can support key decisions you need to make. Here are a few instances as to when your business could use this type of advice.
So one of them is incorporating. Is it time to incorporate? Because your friend says that they incorporated is not a good reason for you to incorporate. Incorporation, there's lots of reasons to incorporate. One of them is tax savings. One of them is there's, legal liabilities, in which case I would probably urge somebody to have a conversation with a lawyer to make sure that what's going to be set up is going to work for that. That's one key area where I see that a conversation would be beneficial before you take the plunge, so to speak. The next one is maybe if you're going to buy or sell a business. So you decide that you've got a business that you're going to take over. So there's lots of ways that this can be structured. Lawyers will have a preference, but there's tax implications to buying assets or buying shares or anything in between. So there's tax implications. Restructuring your business, so to bring in family members, this is a huge conversation because there's not only tax implications, but there is family implications.
How does Peggy see the value of having an accountant in your advisory team?
Sometimes what happens is people don't understand the cost benefit. When you call an accountant and you keep seeing, the hours rack up and the bills coming, you're looking at, as a business person, you're cost conscious and you're looking at the cost of that service. But what you're not realizing is the cost savings if the right decisions are made now and if the right strategy is developed now and if the tax savings are planned.
Rita talks about the need to frequently be in communication with your accountant.
We work with our accountant every year, beginning, middle, during, as anything comes up, to ensure that, we're not going to pay 1 cent more.
Many businesses that we speak to wish they had a crystal ball when it comes to running their company. While this isn't realistic, what could be accomplished is reducing risk through improved planning with the right type of advisors so that you are making informed decisions. Learn more about how you can get the most from your accountant, as it could bring you some serenity now. Let's take a listen.
Welcome to Serenity Now for Entrepreneurs. This episode is a key episode for those who are not fans of numbers. And you hide from your accountant every year, or you have this shoebox of receipts and you're wondering when you can drop it off without being detected. It's very important that we have this conversation because a lot of companies have a misunderstanding of what an accountant does, how they can actually help us. And then on the flip side, we happen to have an accountant as a part of Serenity Sisters, and she can tell us what drives her crazy as an accountant. What are we doing? And I accept that. What are we doing that is driving my accountant crazy? So, Candice, this is a really interesting episode for me because I feel like in our pre-chat, we discussed how even amongst the Serenity Sisters, some of us didn't really utilize the services and knowledge of our accountants well early on. And then there's other ones who have, planned their business with the accountant, with the lawyer. And so, Candice, tell us a little bit more about accounting and how there could be impact in a business throughout the year as opposed to just at the end of the year, at year end.
So there's a bit of a misconception that accountants do bookkeeping, and that's what accountants are. And yes, some accountants do that kind of work, but the primary work and goal of an accountant is to actually analyze that record keeping that's done. So sometimes we need to do the record keeping so that we can do the analyzing. And sometimes people have a bookkeeper in place so that, we can take those records and analyze. And so the best use of the accountant is when you're not a large enough company to have a full-time CPA on staff, that you can use your accountant to help you make business decisions. Maybe you want to think about taking out a loan to expand your business, or you're thinking about taking on a partner, or you're thinking about hiring your first employee. I can't tell you how many times I've had a conversation about somebody hiring their first employee, and were they ready? And that's what we're there for. We have helped numerous businesses through these decisions. We're not going to tell you what to do. We're going to help you analyze your situation, your risk tolerances, and what makes sense for your circumstances. And that's the important part, your circumstances. We need to analyze your situation, your circumstances, and work out something that works for you. So we're a wealth of knowledge. And if you get to the point where you've already made the decision and you've papered it and you've signed on the bottom line, it's too late. There may have been a better way to transact that. But if you've already signed, there's not much I can do at that point. So it's come early and come often.
Mm-hmm. And Rita, you were mentioning the importance of having an accountant in an advisory role. And you are one of those who have the planning done ahead of time, right? You don't involve the accountant after everything has been signed off, or you're not one that just goes to the accountant once a year. So tell us a little bit about why you do that.
Well, after working, I guess now just over 10,000 businesses, we've seen a few things, and we've seen a lot of things when they go the wrong way. And it's our job typically to come in and clean up and fix things. And so if I can, we still work with those that plan in advance. So I'm not saying I'm going to shut down my company or anything. In our viewpoint, we've seen a few things go the wrong way because we haven't involved the right advisors. One of the key people that we talk to, either when you're starting a business, growing a business, selling a business, is we bring in the accountant immediately. There's no waiting. There's no let's have a discussion and then talk to them. You know, Candace was talking a moment ago about if you papered up something. So let's say you've incorporated a company. If you haven't had the chance to sit down with the accountant, we could have discussed different strategies for future growth of the company, such as if we're going to bring on investors, or if we are planning to do some different things in the business in terms of IP or manufacturing or processing. All of those discussions can be done in advance with the accountant, and we could have teed up slightly different strategies for that. And I'll work with the accountant and the client. As Candace says, we never tell anyone what to do either, but we work together to build that strategy to make sure it works for you and for your growth. And without having those deeper discussions in advance, then all we're doing is trying to put out fires after the fact, which becomes way more costly. So hopefully that answers your question, but we're first advisors that we reach out to as part of building a team or a group of partners is going to be the accountant.
I think sometimes what happens is people don't understand the cost benefit. When you call an accountant and you keep seeing, the hours rack up and the bills coming, you're looking at, as a business person, you're cost conscious and you're looking at the cost of that service. But what you're not realizing is the cost savings if the right decisions are made now, and if the right strategy is developed now, and if the tax savings are planned. I think some of the more costly mistakes I've made in business, well, besides having a really bad account at one time, but we can talk about that later, are actually by having to undo things that could have been done more efficiently if we had had that conversation early. And it's true. We all pledge along and think that, we know what we're doing, but really you need that perspective. You need a very different perspective than your own when you enter into some of the larger decisions, incorporating a company for the purchase of a building, or, all those different things, and including, like you mentioned, Candace, just even hiring people. But Stephanie, you brought up a really good point earlier we were discussing ahead of time, is about maybe, do I pay myself as an employee, or do I pay myself as a contractor? Do I take dividends? That's always a discussion that should happen, not at the end of the year when the taxes are now overdue, but throughout the year. Do you see that often, Candace?
Oh, yes. I see lots of people, they come at the end of the year and they've withdrawn a bunch of money and they haven't made any payroll remittances. So we have no choice. We're kind of painted into a corner. It's like, okay, well, the only option left is dividends. But I have to tell you that currently dividends are there's a slightly higher tax cumulative between a corporation and an individual by paying dividends, because the integration isn't quite lined up. So paying salary is actually slightly better. And there's lots of other reasons why one would pay salary versus a dividend. And, it's to do with financing. The banks like salary better than dividends. You can't get RSP contribution room on a dividend. And disability insurance. Some disability insurances will only insure your actual earned income. Dividends are not considered earned income. So there's lots of reasons why one is better than the other. And again, it's going to be very specific to the individual circumstances. Because there's a couple situations where dividends are actually better, but it's a very specific set of circumstances.
Thank you.
I'm sorry. I was going to say, if I can add to that, in the SHRED program, if entrepreneurs paying themselves a contract amount or a dividend, it's not eligible under the program. So you could be missing out on some government benefits as well, like the SHRED program. I'm sure Steph can offer something on that too.
It's different when you're the business owner. You shouldn't be granted to be, hiring yourself to be an employee. So let's not go down that route. That's not going to happen as much. But definitely, with employees, there's the benefit there, right? I will say also something that I had learned pretty late in kind of my entrepreneurial life is the importance of connecting the accountant with the lawyer, with the financial advisor, with whoever else, a third party bookkeeper, if that's who it is. And just making sure that they're all talking together, because often a decision is made with one party and it's not communicated, like Candace says, until everything's signed off. And it's like, whoa, but then that doesn't work on the accounting side. So I think it's also very important to make sure that you're connecting these different advisors together so that they can have a discussion. They can use their jargon and terms. You might not need to know exactly what is being said and how it's being said, but the bottom line is they're then able to collectively work for you and on behalf of you so that you're choosing kind of the best option for whatever it is that you're looking to do. And just on a personal note, the difference of collecting dividends, and I'm going to go into the next topic in a minute, but dividends versus putting yourself on payroll and then wanting to qualify for a mortgage. Oh, there are things that people need to know about that as well. And so I learned the hard way. It really set me back a few years because I was advised incorrectly. And so we go into the next question, which is, how do you know that your accountant is a good accountant? Because I have stories. But I wanted to start with Peggy, because Peggy, you have stories too. Start with your story.
My story is that when I went into business at a very young age in my 20s, my friend's father was an accountant. So he became our accountant. And because we were young and naive and new to business, and honestly, I came from a government job into being, a business person. I had no clue, even though I had taken accounting courses and whatnot. It's very different when you're sitting in the seat of the entrepreneur. And anyhow, so as it turns out, he made a bunch of decisions on our behalf, including some that got us a very large tax assessment in our third year in business. So from then on, we made our own decisions and we listened to our advisors and we made sure the accountant that we had made some sense. And we learned a lot in that experience. I think that's the only good thing that comes out of things like that is you actually get the biggest lesson of your life. Don't wish it on anyone, but definitely a good lesson.
Rita, how do you choose? Because you have so many clients that rely on your expertise as well. How do you help them choose the best accountant, or even for your own businesses?
Fantastic question. On our side, I could probably run down your financial statements in about 2.5 minutes, and I'll let you know straight up if it's a good accountant or a bad accountant. Now, not everybody has that luxury. So what I typically do for anyone in business is immediately reach out to your banker. They will have a good list of go-to accountants that they've worked with for years and, are doing things by the book and have worked with the banker to help them grow businesses. That would be a good source. I wouldn't necessarily go to the friend down the road or as Peggy mentioned earlier for all those reasons. But I would stick with trusted advisors. If you've got a lawyer that you're working well with, that's the same thing. So when we expanded to Alberta, one of the things is we chatted with our accountant, said, could you give us a couple of names for some firms over there? And we also asked the lawyer. We ended up picking the lawyer's accountant. because we liked them over everybody else. So we typically go straight to the advisor route to find a solid accountant. And then after that, once you sit down with the accountant, typically the first time you get an accountant, you're allowed to just get a feel for them. Sometimes they use too much jargon and it's not going to work for you because that's just their speak. And other times they're going to say, well, this is how we want to do this, and they won't be able to have a conversation with you. I'm not knocking down Candace. If anybody wants to reach out to an accountant, say hi to Candace. That's a great place to start. But you have to make sure that the personality matches you. They also are able to handle the type of business you're in, have some experience in the business you're in the industry itself. And sometimes you might outgrow the accountant. So that means you have to always be continually looking at your business and your strategy and your growth. And a lot of the times we take over on growth strategies and bring in the next layer of accountants that will help you with that. Not because the one that you have is bad. It's just that you've literally outgrown them and they work in this box and they're very good at it and they helped you get to the next spot. So don't be afraid to be able to say, I think we've outgrown. It's okay. And the accountants themselves will then go, here's the next one. Here's a good person to chat with as well.
Right. And so, Candace, what's really interesting is things have already been done on paper. And I think we could probably add a little context to that just by way of different stages of business, just so that the listeners understand what we mean by that. Because we're not talking about only when you've signed off on your lease or only when some actual legal thing where it's actually happened. So could you give us, just in different stages, early stage, mid stage, end of business, like what are stages where speaking to accountant before you sign on the dotted line or anything is negotiated and set in stone is important?
Well, I don't know about stages per se, but there's definitely some key times where having the conversation with the accountant beforehand is going to be beneficial. So one of them is incorporating. Is it time to incorporate? Because your friend says that they incorporated is not a good reason for you to incorporate. Incorporation, there's lots of reasons to incorporate. One of them is tax savings. There is a potential for tax savings. One of them is there's, legal liabilities, in which case I would probably urge somebody to have a conversation with a lawyer to make sure that what's going to be set up is going to work for that. That's one key area where I see that a conversation would be beneficial before you take the plunge, so to speak. There's a misconception that as soon as you're incorporated, you save taxes, and that's not the case. You have to leave the money in the corporation in order to save the taxes. And that's not where everybody is at, honestly, when they're ready to incorporate, maybe. The next one is maybe if you're going to buy or sell a business. So you decide that you've got a business that you're going to take over. So there's lots of ways that this can be structured, and lawyers will have a preference, but there's tax implications to buying assets or buying shares or anything in between. So there's tax implications. And I'm not saying that one is better than the other, but at least you should have the knowledge so that you can make an educated decision so that it makes sense for you. So, and that's the same on selling a business. You can sell shares, you can sell assets, and one might work better for you. And there's going to be external pressures because the purchaser's also going to prefer one strategy over another. So having the knowledge to understand what each means to you before you actually make an agreement. Restructuring your business, so to bring in family members, this is a huge conversation because there's not only tax implications, but there is family implications. And if it's not, and if you don't go through all the discussions that, I've seen things go sideways in a bad way because not all family members understand what's going on. So it's about the conversations, having conversations. Anything that has a number attached to it, just have a conversation with your accountant and make sure that you're getting the best advice before you make the final decision. Divorces, that's a big one. Yeah. I cannot tell you how many bad divorce agreements I've seen because nobody talked to the accountant before everybody signed. And then they've got something that if had been slightly changed, then all of a sudden support payments are deductible and things like that. So it's really important to have conversations before you make these big life decisions. Anything that has a number is basically
So, common misconception, and I've had this misconception because this was handed down through my generations, is maximize your expenses and minimize your tax payments. And so I know that this had come up in our pre-chat, and I wanted to unpack that a little bit because obviously, it's not every business that has the luxury of having multiple advisors who can tell them this. They've probably learned this from the last generation, or this is what they were told one day by a friend a long time ago, and that stuck with them, and now it's 20 years down the road and they're still doing it. What do you have to say about that, Candace, or Rita, or Peggy?
I'm sure I know Rita has a lot to say about this, especially in the time to grow your business. So the big thing I'm going to say is sometimes it's not about tax. Sometimes that income figure that you're reporting affects the rest of your life. If you're trying to qualify for a personal mortgage and you have a business that is consistently showing losses, good luck getting the mortgage. If you're trying to get a loan to grow your business and your business is consistently showing losses, good luck getting that loan. If you're trying to sell your business and your business is consistently showing losses, what do you think somebody's going to pay for that business? So having a balance between the business expenses that are legitimately incurred to run that business so that you have a true picture of what the business is doing, profit-wise and all that. Yes, you're going to have to pay taxes, and I don't think anybody should pay a cent more than they have to, but you have to pay taxes if you have a profitable business. And you have to have a profitable business in order to get mortgages, get loans to grow your business, sell your business.
Rita.
So I'm just going to layer onto that. That was beautifully done. Thanks, Candace. It's just that I hear it so much every day. The big piece that I wanted to make sure that everybody is able to take away, not just understanding, you can raise your expenses and then you pay less taxes. That's not a tax strategy. That's not tax planning. That is not anything other than waiting till the 11th hour and freaking out. And my suggestion is, again, stay in constant communication and contact with your advisors and your accountant, because as you're growing your business, whether or not you're doing growth this year, eventually you may decide to sell the business, and showing, year over year losses is not going to help you. It doesn't help anyone. Do I like paying taxes? Someone's going to maybe bring that up. No. Who the heck does? No, we don't. Right. But I have a viable business and I've never not paid taxes. And I'm actually proud of that because we've done a good job with the business. So it shows the dedication you have to the business. But like Candace says, we work with our accountant every year, beginning, middle, during, as anything comes up, to ensure that, we're not going to pay 1 cent more. I really like how you put that, Candace. Nicely done.
Mm-hmm. Peggy, anything to add to that?
You mean I can't use all that cash that I just got and just put it under the table and not show that income and put all my
I don't have any
expenses through.
I do not have any clients that do that, or if they do, they haven't told me because I don't work with that. The whole cash, there's just a whole world of hurt for not reporting income.
Yeah, it's just a harebrained idea, isn't it? Really, honestly, if you really want to succeed in business, that is not a good way to start. Not to mention that it puts your accountant in a bad place ethically.
No, it doesn't, because I just refuse to work with it.
That's right.
Fair enough. Good accountants refuse that, people. So if your accountant says no problem, you have a problem.
Yeah, you have a problem. Yeah.
One thing I wanted to mention, just, when I had mentioned earlier about chatting with your banker, the reason why I said go there first for a good accountant, a little unknown secret in the banking or finance world. There's a good guy list of accountants, and then there's a blacklist of accountants, and we all know who they are. And you might think that they don't know who you are, but accountants, we know every one of you, everyone that has done a good job.
I'm happy to say I'm on the good guy list.
Candace is on the good guy list.
I wish I knew where my old accountant was.
So we always do a quick fire, and that allows us to just share a little tidbit of what we learned today that may have been a little bit different than what we originally expected, or for those who have a little bit more to share, for them to add emphasis or additional information for us to consider. So I'm going to start with Rita. Rita, quick fire.
My recommendation is seek out an accountant, seek them out often, keep on communicating, and don't stop. That's it. And if you're not sure of how to find a good accountant, well, reach out to the Serenity Sisters. There you go. You can do that. Reach out to your bankers or your lawyers or other advisors, and I'm sure we'll all be able to help you find someone good.
Mm-hmm. Peggy.
I think you have to think about the cost benefit. You have to think about, stop looking at what your accountant is charging you. They are expensive because they have knowledge. And not only that, but what they will save you or they will make you will far outweigh the cost of their service at the beginning. And it's tough when you're a starter to pay those bills, but it is so worth it. If you can't see it, we're telling you it is worth it.
Mm-hmm. Candace.
I'm going to say communication is key. Any professional. And when clients come to me looking for other professionals, I always give them 2 or 3 names, and I encourage them to have conversations. Because if you can't have a conversation with the professional that you're going to work with, it's probably not the right professional for you. Doesn't mean that they're bad at their job. It just means it's not the person for you. You need to be able to work with professionals that you can talk to. And if you're not with one that works for you right now, keep looking, because there's lots of good accountants, lots of good lawyers, lots of good financial advisors that will talk to you and will talk to you in the language that you can understand. Make sure that you're clear that you're not understanding. There's nothing wrong with that. And if they're making you feel guilty for not understanding, then they're probably not the right accountant or advisor. So to me, communication is key. It's central to any professional relationship with any professional in your business.
And I'm going to go with, picked out something, I think it was Rita, you had said this, is find someone who understands your industry, right? Because I think that that's quite important. You know, being a service-based business is different than being a product-based business. So if you're working with an accountant who's really frequently, 80-90% of the book is holding companies and service-based businesses, and then now you want them to help you with cost accounting, things like shipping costs and helping you understand like where your money going and what's the tax planning associated with some of these things to do with buying machinery, for instance. Like that is a different ball of wax. So it's just really important to choose an advisor who has experience in your industry, and so that they can also add value. Maybe they've seen a situation with another client and they're able to apply it towards, what it is, a similar situation in your business. So just keep that in mind. There's a lot of accountants, and speak to many of them. Don't just speak to one when you choose them. Don't feel obligated that they spent 30 minutes with you. Have a conversation with them, and they're interviewing you as much as you're interviewing them. That's important as well, right? So, okay, well, thank you so much for sharing your tidbits. And I know that from this, hopefully the listeners at Serenity Now for Entrepreneur will not be driving their accountant crazy, hopefully, and also know how to best leverage the advisory services of an accountant and not just be bringing their shoebox with their receipts at the end of the year, asking them to do entries, because we know now that accountants are not bookkeepers. So we'll leave you with that, and we hope that this episode has brought you some serenity now.
We hope you enjoyed this episode and picked up some good tips and best practices that would benefit your entrepreneurial journey. Remember, none of the content in this podcast should be relied upon as standard legal or business advice. Always consult a professional for your specific business. You may know someone who could benefit from this podcast. Please share it with your business community, and perhaps it can give an entrepreneur some serenity now.